Good morning, welcome. Thank you for joining. My name's Tom Adcock. I'm one of the tax partners here at Gravita. I was formerly one of the partners, along with Sandy, at CBW. And for those of you who don't know, CBW, Car Tobacco Winter, we merged with Gravita back in April this year. And Gravita now stands as a top 25 accounting firm in the City of London. And we're growing to try and meet all the needs of our expanding client base, which of course includes a lot of you. So thank you very much for coming along to listen to us talk today. Sandy's going to take you through VAT and the construction industry and the changes that have been introduced over the last couple of years and how they may affect you as clients. If you do have any questions along the way, please drop them into the chat function and we'll try and address them at the end. And of course, if you have any questions after today, then just pop either myself or Sandy, but probably Sandy, an email, and I'm sure she'll come back to you and help you out. How do I skip the slide? How do we skip the slide? There you go. So I don't have control over the slides. So sorry about that. I have to do this to see if it moves. So that's Sandy and myself. I've introduced myself. I'll let Sandy talk about Sandy, but she is head of VAT here at Gravita. So yeah, so who are Gravita? So we're a top 25 full service chartered accounting firm, about 400, probably 440 people these days. That number keeps getting bigger, which is great. We're a member of DFK, which is the 6th largest association of these sort of worldwide independent accounting firms organisations. And I am one of the UK tax representatives on the International Tax Committee, which is an enormously long title and definitely needs an acronym. But we, as a business, are heavily involved with them. So should you have any international needs, we can help by introducing you to our friends around the world. And as part of what we do, unsurprisingly, we have a lot of expertise in the property sector, particularly. We've got something like 4,000 property clients, ranging from, the family who own a £250,000 property rental, all the way up to billion-dollar property developments, owned by everybody, everywhere, doing everything you can possibly imagine with property here in the UK. And so we can certainly help you or anyone you know if they've got any issues with land and property here in the UK. So without further ado, I think I'm going to hand over to Sandy so she can introduce herself and take you through CIS and VAT.
Thank you, Tom. Good morning and welcome to everybody. Just a brief overview on me. As Tom mentioned, I'm a VAT partner here at Gravita, formerly with CBW. I have worked in industry for a very large period of time, but unusually then went into practice where I've been for much longer than I was working in practice. Thoroughly enjoy doing VAT and property and helping clients along their way, navigating through what can be quite a nuanced area for VAT purposes. This morning, I'm going to go through terminology to give you an overview of the construction industry scheme. As the slide says, I'm going to also talk about the domestic reverse charge, where that applies, and to expand on some of the terminology that will enable you as clients understand your position in the supply chain and therefore what the criteria is needed to be met to ensure that the relevant taxes are accounted for correctly. We've only got 30 or so minutes, and this is a very highly technical area, so I'm going to try my best to get through as much of this as possible. Please do note that, businesses have their own activities, their own structures, and if we don't get this right, the penalties can be imposed. And therefore, we do recommend that you get specific advice on your supply chain. So a little bit of history before we go into the terminology. The construction industry scheme was originally introduced in the 1970s, would you believe? That long ago. And it was introduced as a preventative mechanism to target tax evasion that was perceived to be prevalent in the construction industry. And this was common where non-UK workers were utilised on construction projects. They were receiving cash payments on which no VAT was being accounted for, because those workers would go back to their country of residence without having accounted for VAT. So you can imagine the Treasury losing out money by those sorts of scenarios that were occurring. So the construction industry, the scheme itself has taken different forms since it was first introduced in the 70s, with the most recent version being introduced on the 6th of April 2007. There have been more updates and adjustments to the rules, and the most recent ones were done in April 2021. I'm not going to go through all of the legislative references. I put them on the slides just in case for those of for those amongst us who like legal references and titles. I've just included them for completeness. I think we also are looking at the application, and again, I'm going to go into the extent of it and the terminology shortly. But the construction industry scheme can apply to more than just UK construction businesses, so we just need to be really careful who we're dealing with. So, what is CIS, I hear you ask? Well, in simple terms, it's a tax withholding and reporting regime that applies to payments made from contractors to subcontractors. These payments are made under contracts which include construction operations undertaken within the UK or the territorial waters. And again, to be precise, and not that I'm an anorak, but territorial waters means extending the 12 nautical miles from the high water mark. And it can be relevant. Certain construction operations do include wind turbines and things that may be built in the sort of waters within those sort of territories. So just to be complete on that point. We're then looking at payments that are required to be included on a return that's made, known as a contract payments. And broadly, these are payments that are made under a contract for building works by a type of customer that the CIS scheme calls a contractor. Those that are not excluded by law from being contract payments. So basically, if a customer is not a contractor, then its payments are not contract payments. They do not need to be included on a CIS return. So neither the CIS nor the domestic reverse charge applies. I'm coming on to the domestic reverse charge shortly. However, if the customer is a contractor, but it makes a payment that is not a contract payment, even though the contractor will file a CIS return, the payment is not required to be included. So again, neither the CIS or the domestic reverse charge applies. So we come on to terminology. Construction operations, what does that mean? These are services to which a scheme applies and include a wide range of work done to permanent or temporary building or structures or associated land. And that includes works from site clearance to civil engineering works and not just the build of the property itself. The construction industry scheme, I'm going to say CIS because my teeth are falling out trying to say that. Right, so the CIS can never apply unless construction operations are provided. It's identical to that of construction services under the domestic reverse charge legislation. So you'll see that they mirror one another quite well, apart from use of certain terminology where the word operations rather than services is used. But, that's not a big issue. So a very useful index of the types of construction operations and some commentary relating to them is provided by HMRC, and you'll find that in their construction industry reform manual, and covers all the works, like I say, from demolition and covers the certain temporary structures. So we then look at the construction contract. The contract is, of course, a legally binding agreement or arrangement under which one person, the subcontractor, does work or provides services or labour for another, i.e. the contractor. And which contain construction operations. So you've got three parts there: the subcontractor, the contractor, and the nature of the operations involved. Please note that an employment contract is not a construction contract for CIS purposes, and therefore CIS will not apply to payments made by contractors to their employees. We go on to the contract payments, and this includes any payments made by a contractor to a subcontractor, or it could be another party, for example, someone nominated by that subcontractor. And this is done under a construction contract. Those payments can include cash, check, or credit, for example, if there's a loan. And even if a contractor is obliged to file returns and receive construction operations, the CIS can only occur on contract payments, and only contract payments are entered onto the CIS return. The definition of contract payments is wide. Any payments made under a construction contract is a contract payment, and any contract providing for construction operations is a construction contract. So many non-construction payments can be tainted by obligations to provide construction operations that sit along them in a contract. And therefore, just please note that care needs to be taken, and perhaps ring fencing certain operations or ensuring that the contracts are scrutinised for such implications is highly recommended. We've then got certain material costs that are not treated as contract payments, and some payments that are excluded from being contract payments. And namely, these are, like I said earlier, payments that are made under a contract of employment, can be payments which are reasonably, can be taken to be services for an individual, and where the provision of those services gives rise to an engagement to which the off-payroll working rules apply. Also, payments where the person receiving the payment is registered for gross payment at the time the payment is made. There are special rules to consider where the recipient is in a partnership. I'm not going to go into detail that, but just to make you aware. And then any other payments that are specifically excluded by virtue of the Income Tax Act. And what this means in practice is that the agency rules and the off-payroll working take priority over the CIS. We then come on to the deductions. This is where a contractor makes a deduction from the payment that it makes to their subcontractor. The contractor must provide the subcontractor with a monthly deduction statement, and this sets out the amounts paid and the deductions made. HMRC prefer that the contractor provides these statements even when no deduction has been made, but they do accept that this isn't required. So the deduction is the amount of tax that a contractor must withhold and pay that to HMRC. And the deduction will either be at the standard rate of 20% or a higher rate of 30%. And you'll see the legal definition stated there. The contractor, well, this can be a party to the construction contract, and this can be either a business, which includes the carrying out of construction operations, such as a construction business or a property developer. And these contractors are referred to as mainstream contractors. A business that is not a mainstream contractor, but whose cumulative VAT exclusive expenditure on construction operations within the previous 12-month period exceeds 3 million, and HMRC refers to these as deemed contractors. Any type of other body, say for example a local authority or a housing association, whose cumulative VAT exclusive expenditure is the same as I've just mentioned, say within the previous 12 months exceeds 3 million, they can also be classed as deemed contractors. And then you've got any other type of subcontractor who engages other subcontractors to carry out construction work. So we talk about the contractor. I've mentioned the thresholds. So the contractor is a business or other concern, in summary, that pays a subcontractor for those construction works. The contractors can be construction companies and building firms, but like I've mentioned, these can be government departments and local authorities, and many other businesses that are normally known in the industry as clients, so they may include yourselves. So some businesses are counted as contractors if they have spent more than the 3 million, as I've said, and these rules require businesses to monitor the construction spend regularly. So it's quite important that you do manage that to ensure that when you are about to reach the threshold, you do take the action that's required. And a common question that I do get faced with, so I thought I'd make a point here. Private householders are not counted as contractors, and therefore they're not covered by the scheme. We then move on to intermediary suppliers. The intermediary suppliers are VAT and CIS registered businesses that are connected or linked to end users. I'll come on to that in a minute. If intermediary suppliers buy construction services and resupply them to a connected or linked end user, without making a material alteration to the supplies, they are treated as if they are the end users, and the domestic reverse charge does not apply. To be connected to an end user, or a linked user, the intermediary suppliers must either have a relevant interest in the same land where the construction works are taking place. For example, you see that quite commonly in the landlord or tenant situation, or be part of the same corporate group or undertaking. And the notification of end user or intermediary status can be made by post, email, or can just be included in the contract. And this notification must be kept in the business records. Coming on to the end user, for reverse charge purposes, consumers and final customers are called end users. They are businesses that, as I mentioned, are VAT registered and CIS registered, but do not make onward supplies of the building and construction services that they have received. The domestic reverse charge does not apply to supplies to end users where the end user tells the supplier in writing that they are an end user. There are certain costs that we need to consider. So, for example, legal and professional costs. These are normally standard rated unless they fall to be part of a design and build contract. I'm not going into detail of design and build contracts, but only to say that if the design and build is of a new residential and we can have one contract that includes the legal and professional costs, the whole of the supply will be zero rated. So we move on to labour only subcontractors. So where we've got a supply of labour only construction services, it is subject to the domestic reverse charge, whereas, as I've mentioned before, a supply of staff isn't. And the simplest way to tell the difference for the supply is labour only construction services. The business is supplying the labour, and it will be responsible for overseeing the completion of the work carried out by the workers. However, where it's staff, the customer that receives the workers will be responsible for overseeing the work or overseeing the completion that's carried out. So a slight difference there that hopefully will help you address the businesses. Excuse me. Okay, so another question that I am repeatedly asked is whether or not the CIS only applies to UK businesses and UK property developers. And the simple answer is no. The scope of the CIS is much wider than that. So firstly, HMRC treats overseas contractors and subcontractors in the same way as if they were based in the UK. If a construction project is undertaken in the UK or within the territorial waters, the 12 miles that I mentioned, CIS will need to be considered and potentially applied. So that means that overseas-based contractors and subcontractors will need to register for and operate the scheme for contractors only in relation to the UK construction projects. Secondly, the point there is the inclusion of deemed contractors. It means that non-construction businesses and certain other bodies whose annual expenditure on construction operations exceeds the deemed contractor thresholds bring them within the scope. So deemed contractors may have to operate the CIS immediately after the threshold is exceeded or is expected to be reached, and before the next contract payment is made. So you will hear a lot of repetition here, and hopefully the message will get in. But what I'm saying there is that the continuous rolling 12-month check on the construction expenditure is therefore required to be monitored against that threshold. The requirement to register is subject to a discretionary period of grace, and that's to be agreed with HMRC, but it shouldn't exceed 90 days. So we move on to what obligations the CIS contractors have. There are 7 steps in total. They're up there on the screen. Step 1 is the timing of the registration, and it depends on the contractor type. Mainstream contractors must register for CIS before paying their first subcontractor, and deemed contractors must register only once they've exceeded or are expected to exceed the deemed contractor threshold. Step 2 is the consideration of the status of the subcontractors individually. So this is where I'm talking about whether or not they are payroll employees or whether they fall within the right criteria. So if the status assessment shows that the subcontractor is self-employed, then subject to the services falling within the definition of construction operations, the contractor must apply CIS. Step 3 is what I've been talking about previously. So do the agency provision or off-roll payroll working regulations apply? If so, they will take precedence over the CIS. Step 4 is to identify the nature of the construction operation. You'll see some examples there on the slides in front of you. But one thing to mention is, an example there where carpet fitting is done in isolation, it wouldn't fall within the definition of construction operation. But if carpet fitting is undertaken as a finished operation on a wider construction project or under a single contract, which includes other services falling within the definition of construction operations, such as painting and decorating, a contract payment for that carpet fitting will be within the scope of CIS. So we continue with the obligations for contractors, and the 5th one is for them to verify the subcontractors. So the contractor needs to verify each of the subcontractors' registration status with HMRC before the payment is made to them. This can be done online by the contractors, and HMRC will confirm whether the subcontractor is registered for net or gross payment status, or whether or not indeed they're unregistered. A contractor doesn't have to verify a subcontractor if they included that subcontractor on a CIS return in the previous 2 years or the current tax year. Step 6 talks about the deductions. So where a subcontractor does not have gross payment status, the contractor must deduct the tax from the contract payment before paying that subcontractor, and pay that tax to HMRC and provide the subcontractor with a statement showing the deduction made. When we calculate the CIS deduction, again on the slide, you'll see some things that aren't normally treated as part of the contract payment. Step 7 then is to finally submit the CIS return, and this is where contractors are required to send HMRC a monthly return, and that's a CIS 300, and that will include all payments made to subcontractors in that tax month. That return must include all details for that tax month of the subcontractors paid, and payments made, including those to subcontractors with gross payment status, The cost treated as materials and the tax deductions must be stated. The return must be submitted to HMRC within 14 days of the end of the tax month end it relates to. So basically, if it relates to works done in October, the CIS 300 needs to be with the HMRC by the 14th of November. And strictly nil returns where no subcontractors have been paid, they're not really required. However, HMRC have been known to issue penalties if no return has been submitted for that month. So unless the contractor has registered for a period of inactivity, in reality, it means that nil returns are required. So we then talk about the types of services and the component parts that this may involve. So legal and professional costs, they're normally standard rated, normally, you know, supplied from a UK professional to a UK contractor. And I'm saying they're subject to VAT at the standard rate because we may have examples where those services are provided to non-established traders but still fall within the CIS. However, as I mentioned before, if there's an ability to fit the legal and professional costs within a design and build contract, they wouldn't have the standard rate applied to them. We look at labour-only subcontractors. So a supply of labour-only construction services is subject to the domestic reverse charge, whereas a supply of staff is not, as I've mentioned earlier. And I've mentioned, you know, looking at the types of contracts to differentiate between the two. Construction work, so the domestic reverse charge only applies to customers who are registered for the construction industry scheme and or should be registered for VAT. I'm going to come on to the registration for VAT shortly. So they should be registered for VAT and have not notified the supplier that they are an end user or intermediary supplier. So where any of the services in the supply are subject to the domestic reverse charge, all other supplies, all other services supplied will also be subject to it. However, please note that if the reverse charge element of the supply is for a value of 5% or less of the value of the whole supply, this can be disregarded, and it's commonly referred to as, would you believe, the 5% disregard. And therefore, the normal rules will apply if the customer makes an end user or intermediary supply notification. And a point to note on the decorating. So I've mentioned carpets. So we're talking about carpets, white goods. So in some cases that will only be due on the goods and not their installation. And this typically arises when the white goods, you know, such as cookers, fridge freezers, etc., are installed in the course of a zero-rated construction of residential property. But it means that any domestic reverse charge would only be confined to the goods themselves. And HMRC have confirmed that the domestic reverse charge should not be applied in these cases, so the VAT should be charged and accounted for by goods in the normal way. What we've got here is a flow chart. It's available on HMRC's website, and for me it's quite a useful tool for you to go through. So once you've identified that your supplies fall within the scope of CIS, if they don't, obviously you revert to normal VAT rule. If they do, you go down, you look at whether or not the supply is standard or reduced rate. If it isn't, because it's a zero rated supply, then of course there's nothing to account for under the domestic reverse charge. So we move to the next question. I'm not going to go through this point by point, but this is a really useful guide for you to use to understand whether or not the domestic reverse charge will apply to the supplies in question. So going on to the domestic reverse charge, So on the 1st of March 2021, the domestic reverse charge for building and construction services came into effect for VAT registered businesses in the construction industry scheme. So in a nutshell, from that date, the domestic reverse charge means that a subcontractor in the CIS scheme will not charge VAT on its invoice to a VAT registered contractor in the CIS. Instead, the contractor accounts for VAT on its VAT return as both output tax, so it's as if they've made a supply, so it's deemed VAT, and the VAT on the purchase, and they calculate that. So under most reverse charge mechanisms, the reverse charge itself counts towards the customer's taxable turnover for VAT registration purposes. And a point to raise here is that this does not apply to the domestic reverse charge. And it's quite important to note that, you know, in our field, for those of you that do use the normal reverse charge, there will be a requirement once you receive services that are over the 85,000 grand threshold, there's a requirement to register for VAT. This is not the case for receiving domestic reverse charge supply. So if your recipient isn't VAT registered, they don't have to by virtue of this exception. So I just wanted to make sure that that was mentioned today, so there's no misconception of the registration status. So we move it on to making the sales. So if you're a UK subcontractor invoicing a UK contractor for the CIS services, either for labour or labour plus materials, but not for the materials only, on which VAT would normally be charged at the standard or reduced rate, you no longer have to charge VAT. Instead, your invoice will have a note on it to say that the domestic reverse charge applies. Your customer is required to account for the VAT, i.e. under the reverse charge, and that customer is paying the VAT to HMRC. So going back to my original example of the non-UK workers, this is what's in place to stop those non-UK workers from not accounting for VAT. You must also clearly state how much VAT is due under the reverse charge, or the rate of VAT if the amount can't be shown. But the VAT due should not be included in the amount that you charge to your customer. And all you need to do is account for the value of that net sale in box 6 of your corresponding VAT return. And please note that where the reverse charge does apply, you should check and keep a record of the VAT numbers, the CIS status, and the UTR number of your customers for each contract, so that you can provide that information to HMRC if you're required to do so. So we move on to the other side of it. So if you are buying in certain services, so if you're a UK contractor receiving invoices from UK subcontractors for CIS services, you should not be charged VAT. Instead, there should be a statement, as I've said, from on each of the invoices saying there's something for you to do, i.e. the domestic reverse charge applied, and you, the customer, is required to account for the VAT. And as I've mentioned, each invoice should also state the VAT that you need to account for. On your VAT return, the VAT figures that needs to be completed are box 1, which is your VAT on sales, and box 4 of your VAT return, which is the input tax. And the invoice value should be entered into box 7. Sorry, I've missed off on the slide, but that should say box 7 of the VAT return. And as usual, use the CIS verification system to ensure that your supplier is registered for VAT. And there's a link shown on the slide in front of you to enable you to do that. So carrying on with when the domestic reverse charge applies. So we've talked about various scenarios, but often companies who wouldn't consider themselves to be construction companies fail to account for the domestic reverse charge. So as I've mentioned, the CIS rules change in April 21, and basically what effect that took was that there are so many more businesses that are within the scope of the CIS, and businesses need to be sure that they are carrying out the correct VAT treatment. And as I mentioned in the introduction, if they don't, they could be liable to penalties and therefore need to take that advice. The services that are specified under the domestic reverse charge are really broad. They apply to construction, alterations, repairs, extensions, painting and decorating, demolition, civil engineering, installation of heating equipment, lighting and air conditioning. So you can see it's really, really vast. So please take care. And moreover, a lot of difficulty in this area has been focused on whether or not the customer is an end user. And just to re-emphasize, an end user is someone who receives the specified services for any purposes other than making an onward supply of their services. So we move on to the impact on construction businesses and specifically to the accounting systems. We have businesses that operate different accounting systems. So again, I'm going to go on to what the likes of Sage and Xero have done. There are nuances within the cash accounting system and the flat rate scheme. And for those of you that do operate the cash accounting or flat rate scheme, do shout if you need specific questions, but there's an interesting exception for users of the flat rate scheme, which means that the reverse charge supplies are not to be accounted for when using that scheme. And it was just a point to mention there. So rules apply to the following. So I'm just going to take an example using the central heating and hot water system. So it's important to appreciate that where some of the components of what's been installed are either zero or reduced rate, when supplied together, they can become subject to VAT. So the example that I've got here is that when installing a central heating system, this normally involves the installation of a boiler, the pipework, radiators, valves, etc. Supplied on their own, they can be subject to different rates of VAT. However, when they're supplied as part of a single contract, the whole supply can be standard rated, and as such, the installation is not included within the scheme. So just be careful when we've got mixed supplies. I'm not going to repeat this slide because I think we've exhausted it and probably running out of time, and I've got a little bit more to talk about here. We keep going, sorry. Let's move on to the next slide. Okay, so as I mentioned, the bookkeeping system. So for those of you that do use Sage, and if you're not aware, Sage from version 26 onwards has updated itself with the introduction of a new T code, a T21 code. And this is for subcontractors to use that T21 code, and Sage will update box 6 with the net sales value. The contractors will use T21, and hopefully the connections will link to box 1 and 4 of the VAT return. So hopefully introductions of these additional codes by Sage will allow you to do this in a more automated fashion. Xero, again, it's set up 4 new codes for this and also accommodates the use of the 20 and the 5%, so the standard and the reduced rate. And again, having the automatic flows into box 6 if you're a subcontractor, and then the automatic flows into box 1, 4 and 7 as a contractor. And cash flow have released a document on this, which can be found in the link as per the slide. I will have to mention the consultation. Basically, in summary, the consultation considered whether it would be appropriate, amongst other things, to add VAT to the list of taxes HMRC considers when undertaking the statutory compliance test for those receiving or keeping gross payment status. So the consultation sought out or set out two areas where stakeholders have told HMRC that the CIS is creating unnecessarily admin, and particularly when we've got landlord tenant payments. It concerns contractors and deep contractors, including those in the property sector and those operating within the construction sector generally. The 12-week consultation started in April this year and it ended in July. And we at Gravita did contribute to that. A summary of the questions are on the next slide. And again, I'm not going to go through these all, but just to give you a flavour of some of the questions that have been raised and what HMRC are going to be dealing with over the coming weeks and months. And then finally, to bring this all together, and not to leave out PAYE. For CIS and PAYE, the interaction is, firstly, you need to register as a contractor or subcontractor, as I've mentioned. And to do that, you can call the CIS helpline and you need the information that's stated on the slide. So business name, national insurance number, the UTR, VAT registration if they are VAT registered, and if not, the company registration number if we're talking about a limited company. So if you're a subcontractor and a CIS contractor, i.e. you pay subcontractors for construction work, then you need to register for CIS as both. If you're a sole trader and you already have a UTR, then you can register for CIS online. And you can also apply for gross payment status at this time. When paying subcontractors under the CIS deductions, they'll normally be at a rate of 20%. But if you're not registered for CIS and you can't be verified for whatever reason, it may be that there's some incorrect detail, the deductions will be made at 30%. You can also apply for gross payment status when you register, and this means that the contractor will not make deductions from your payments. But basically, when you're sending your monthly submissions, as usual, to HMRC, you'll also be required to send an employment payment summary showing the CIS deductions for the year to date. HMRC will take your CIS deductions of what you owe in PAYE tax and national insurance. And if your company's PAYE bill for the period is reduced to 0 and you still have some CIS deductions you've not been able to claim back, you can carry these forwards to the next month or quarter in the same tax year. But tell HMRC in the EPS that you've nothing to pay. And by the same token, if you paid too much in CIS deduction, you'll have to make a claim for repayment of CIS, and this can be done online by logging into the government gateway, or you can ask your agent to process this on your behalf. Okay, so that's it for the CIS domestic reverse charge presentation. I don't have a book to plug, so at this moment in time, I'm just going to let you know, as per the slide, that we at Gravita can support you with much more than just CIS, albeit related topics. So, for example, you know, large construction companies import a lot of material, and we do advise on importing. We can also advise on cash flow, and very, very simple ideas that will affect people in this industry. Obviously looking at residential, commercial or mixed use and supplies in this arena. I'm not going to go through the slide point by point, but it just gives you a flavour of what we do in VAT for our clients. I'm going to hand back to Tom now, and just to say a big thank you for still being here at this time and giving me your attention. Thank you.
Thank you, Sandy, and thank you everyone for attending and for listening. We do, in fact, Sandy, have one question So I'm going to put you on the spot. I hope that's all right. Right. So from Familia, apologies if I've incorrectly pronounced your name. Can a subcontractor reclaim the tax deducted by the contractor in the tax year? Sandy, one for you.
I believe that is the case. Yes, as long as all the, the relevant paperwork and all the criteria is met, then absolutely, that would be right under the the correct criteria. I've just gone through all the terminology, so we just need to be careful that we are talking about subcontractors and their obligation. So if they have to make the deductions, yes, they do it during the tax year.
Yeah, great. Okay, thank you for that question. Anybody got any others? If you want to drop it into the chat. Okay. If you do have any follow-up questions after this, please drop us an email, pick up the phone. We'd be delighted to hear from you. Okay. So we're hosting another client webinar on how to be a tax-efficient business from inception to exit on the 29th of November. We'll circulate details and follow our email shortly. And please check out Gravita's events page, gravita.com/events. I suspect that link right there just works. And if you could, please take a moment just to complete our feedback survey. It will be inside our follow-up email, but it really is helpful for us to know what is interesting for you guys so that we can pitch these so it benefits you the best it can do. Right. Again, thank you very much for turning up and listening to Sandy and a great presentation. And we look forward to seeing you again. Thank you very much for your time.